Hello viewers, welcome to my channel. I'm Hashim Ali Khan. So this is the last video on the topic accounts from incomplete records. So already 18 problems I have completed in this video, 19, 22 more problems I'm going to explain you about the accounts of in single entry system. So last videos I have completed the method called statement of affairs method, and the second method is conversion method. In conversion method we are converting the single entry into double entry system and extracting the information by preparing the accounts, debtors account, creditors account. Then we are making the trading profit and loss account and balance sheet. So already last video two problems I have completed on the conversion method. Now this is the next problem on conversion method. So I'm going to read out the 19th problem. So if you want the complete knowledge, I suggest you to watch the videos from beginning. Already I have uploaded so many videos. Go to the playlist of my channel. Select the subject Financial Accounting 2. Select the topic accounts from incomplete records. Watch the initial videos. Definitely you can be able to understand this topic much clearly. Don't join in between. So I'm going to read out the 19th problem. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always before start watching the problems, you must have a hard copy. Now 19th problem. A keeps his books by single entry. On January 1st, 2015, his capital was 6,900. So already capital is given. Beginning of the year 6,900. An analysis of his cash book for 2015 gives the following information. So here cash book is already given. Debit side, receipt side is received from sundry debtors 6,000, paid in on capital account. Paid in on capital account means further capital introduced during the year. The owner has introduced further capital, right? 500 rupees more capital. This will be taken in the balance sheet. Now credit side, due to bank on 1st January 2015. That means beginning of the year there is bank overdraft. The beginning of the year there is a bank overdraft of 740. Then payment to sundry creditors 2,500. General expense of business paid 1,000. Wages paid 1,550. Drawings paid 300. Drawings 300. Balance at bank on 31st December 2015 400. Balance in hand 10 rupees. That means cash at bank 400 and cash in hand 10 rupees at the end of the year. So cash book already given in the problem, no need to make. Now 1st January 2015 opening balances and 31st December 2015 closing balances. So we are given debtors opening closing, stock given opening closing, plant and machinery, furniture, fixture. From the above material, prepare the profit and loss account for the year ended 31st December 2015 and balance sheet at that date. After providing 5% interest on capital, ignoring payment in and drawings. That means further capital introduced. Don't calculate interest on capital on further capital introduced. Because during the year he has introduced 500 rupees further capital. Don't calculate interest on this 500 rupees. Only beginning of the year whatever capital he is having, on that capital, interest on capital will be calculated. And 10% depreciation on plant, 5% depreciation on furniture, and reserve of 5% on sundry debtors. That's all. It's very easy. First of all, opening capital is already given 6,900. But to be on the better side, we make the opening balance sheet. Statement of affairs on 1st January 2015. So asset side, you can see the problem 1st January 2015. Debtors are 5,300. 5,300 debtors. Then creditors are 1,500. Creditors 1,500. And stock 1,700. Plant and machinery 2,000, furniture fitting 140, and bank overdraft. Because in the cash book you can see due to bank. So bank overdraft 740. Take the total of the asset side 9,140. From 9,140 deduct minus 1,500 minus 740, 6,900. This is the capital. Already it is given in the first line. 6,900 is the capital at the beginning of the year. Now, we make debtors account and creditors account to find out credit sales and credit purchases. By making debtors account, we can get credit sales. And by making creditors account we get credit purchases. First of all, we should take the opening and closing balance. Debtors, opening balance debit side, closing balance credit side. Here in the problem it is given debtors 1st January 5,300. Here I have taken 5,000. And 31st December 8,800. Here I have taken 8,800. So opening balance, closing balance. Apart from that, in cash book you can see received from sundry debtors 6,000. In a cash received from debtors, the entry will be cash account debtor to debtors. Cash account is already debited. Now debtors account should be credited. The debtors account credit side by cash 6,000. By cash 6,000 over. Now take the total on the credit side, it is 14,800. So 14,800 minus 5,300. The balancing figure is 9,500. This is what? Credit sales. The balancing figure is the credit sales. The entry for sales, debtors account debtor to sales. So debtors account debit side to credit sales, 9,500. The credit sales are not given in the problem. By making debtors account, we come to know there is a credit sale. Similar calculation for creditors. Beginning of the year creditors are 1,500. End of the year 1,950. So first of all, by balance brought down, opening 1,500. And closing to balance carried down 1,950. This is the closing value, not balancing figure. It is the closing value. This is the closing value. So opening balance credit side, closing balance debit side. Now on the cash book you can say payment to sundry creditors 2,500. That means cash paid to creditors. Entry will be creditors account debtor to cash. The creditors account should be debited. Cash should be credited. Cash is already credited here. Now debit side to cash 2,500. Now take the total on the debit side, it is 4,450. So 4,450 minus 1,500, 2,950 is the credit purchases balancing figure. So the purpose of making debtors account is to find out credit sales, and the purpose of making creditors is to find out credit purchase. Over. Basic calculations completed. Now we are coming to the main trading profit and loss account. Debit side, opening stock. Already opening stock is there 1,700. Beginning of the year 1,700 stock. Two purchases. We don't have any cash purchases. In the cash book, you see, there is no cash purchase at all. That means only credit purchases. How much is the credit purchases? 2,950. So 2,950. And wages paid. And in cash book you can see wages paid 1,550. The wages is a part of trading account. The wages 1,550. Sales. We don't have any cash sales. In the cash book there is no cash sale. The only credit sale is there. How much is the credit sale? 9,500. So 9,500 credit sale. Closing stock. Closing stock is given in the problem 1,900. End of the year 1,900. So 1,900. Take the total credit side 11,400. From 11,400 minus 1,700 minus 2,950 minus 1,550. The gross profit we got 5,200. Gross profit carried down, balancing figure. Now here by gross profit brought down 5,200. Now all indirect expenses will debit. What are the indirect expenses? First it is given general expense of business 1,000. So general expenses 1,000. It is asking you to provide interest on capital at the rate of 5%. Interest on capital 5% on beginning capital. How much is the beginning capital? 6,900. So 5% of 6,900, 345. Now depreciation on plant. Last line it is given 10% depreciation on plant. How much is the plant and machinery? 20,000 or 2,000. 2,000, 10%, 200. Depreciation on furniture is 5%. 5%. How much is the furniture? 140. The 5% of 140, 7. And reserve for doubtful debts 5% on debtors. Debtors means closing debtors. Now see the problem. Closing debtors are 8,800. So 5% of 8,800. So it comes to 440. That's all. Credit side, no other income is there. So take the total 5,200 minus 1,000 minus 345 minus 200 minus 7 minus 440. The net profit is 3,208. 3,208 is the net profit. Trading profit and loss account completed. Now I am coming to the balance sheet. Liability side, creditors. Creditors closing already given in the problem. Creditors closing is 1,950. So 1,950. Capital. Beginning of the year capital is 6,900. So 6,900. To this we add net profit. 3,208 is the net profit. Add up 10,108. To this we add capital introduced. During the year the owner has further introduced capital 500 rupees. In receipts and payments account, cash book. In the cash book debit side it is given paid in on capital account 500. So further capital introduced 500. Add up 10,608 plus interest on capital. How much is the interest on capital? 345. Here we have debited 345. Add up. Drawings. It is given on the payment side of cash book. Drawings 300. So deduct 300. 10,653. Take the total of the liability side 12,603. Now come to assets. Cash in hand, cash at bank. Cash book closing. Last item in cash book, cash in hand is 10 rupees, cash at bank are 400. So I have taken. Debtors. End of the year debtors are 8,800. From debtors, deduct the reserve for doubtful debts. How much is the reserve for doubtful debts? 440. Already profit and loss account debited. So 440 will be deducted. 8,360. Now plant. The plant value is 2,000 at the beginning of the year. Depreciation provided 200. So 1,800. Furniture is 140. So from furniture 140, depreciation 7 rupees, 133. Last one, closing stock. Closing stock end of the year 1,900. You can see here 1,900 is the closing stock. Now total of the assets 12,603. That's all. Balance sheet tallied. So 19th problem completed. Come on. Now we'll start the last and final problem on accounts from incomplete record, single entry system. So the last problem, 20th problem, I am reading out. See carefully. You are given a balance sheet of X and Y. Two partners are there, X and Y. As on 1st January 2015, a summary of cash transactions for 2015. That means cash book. And thirdly, a list of remaining transactions for that year. So these are the things given. Opening balance sheet given, cash book given, and a list of remaining transactions are given. So first of all, opening balance sheet. Balance sheet as on 1st January 2015. Loan 12,000, creditors 27,000, bills payable 1,500. Capital X 80,000, Y 60,000, total 1,40,000, and the total of the balance sheet is 1,80,500. Asset side, debtors 40,000 less provision 750, 39,250. Then bills receivable, stock, plant, building, cash. So this is the opening balance sheet on 1st January. Now cash book. Next page, cash book is given. Debit side to balance on 1st January 2015. Opening balance. Beginning of the year cash on hand is 1,250. Amount received from debtors 1,72,000. Bills receivable. That means cash received on account of bills receivable 35,000. Cash sales, that means cash received on selling the goods 24,500. Payment side, by payment to creditors, by cash purchases, bills payable, loans paid. The beginning of the year there was one loan, yes, 12,000. In the opening balance sheet you can see loan 12,000 was there, and in cash book it is given loan paid off. That means end of the year closing balance sheet loan will not come. Salaries, rent, interest, general charges, drawings X 8,000, Y 7,500. Closing balance of cash is 9,050. That's all. So cash book completely given. Now the additional information given. Total purchases are 2,15,000. See here. Purchases are of two types. Cash purchase and credit purchase. The total purchase is 2,15,000. In this 2,15,000 we have cash purchase as well as credit purchase. The cash purchase is given in the problem. Payment side, cash book payment side, you can see cash purchases 25,000. Cash purchases are 25,000. The total purchase 2,15,000. So from 2,15,000 if we deduct 25,000 we'll get credit purchase. See here, total purchases are 2,15,000. Out of which cash purchases are 25,000 given on the payment side. So deduct 25,000, 1,90,000 are the credit purchases. Similarly, cash total sales. Total sales are 2,35,000. From total sales, if we deduct cash sales, we'll get the credit sales. So total sales are 2,35,000. Whereas cash book shows cash sales are 24,500. 24,500. Deduct 24,500, 2,10,500 are the credit sales. That's all. Next, discount allowed to customers. Customers means debtors. And discount allowed by creditors. Creditors are the suppliers. So discount allowed by creditors is discount received. And discount allowed to customer is the discount allowed. We allow the discount to the customers, it's a loss. Whereas we receive the discount from suppliers, it's a discount received, income. Bills receivable received during the year 60,000. Bills payable granted during the year 50,000. Stock. Stock on 31st/12/2015, closing stock. Then owing for outstanding liabilities. Owing for outstanding liabilities. That means expenses due, outstanding expenses. Then owing for commission earned by the firm. That means commission has been earned but not received. Accrued commission. Commission receivable is 1,200. Provide 5% reserve for doubtful debts and 2.5% discount on debtors. And depreciate building 2.5% and plant 5% per annum. You are required to prepare trading profit and loss account and balance sheet as usual. So before preparing trading profit and loss account balance sheet, we have to make some working notes. So what are the working notes? We have to open total debtors account. Total debtors account, because closing debtors are not given. Closing debtors, opening debtors are given, but closing debtors are not given. We have to find out how much are the closing debtors. Similarly, we have to find out closing creditors and bills receivable, bills payable. These are the things we have to find out. For that purpose, 4 accounts I am preparing: total debtors account, bills receivable account, creditors account, bills payable. Right? The first of all, debtors. Opening debtors. Last year's balance sheet, you can see the balance sheet of last year. Opening debtors are 40,000. Opening debtors are 40,000. So opening debtors 40,000, I have taken debit side. Closing debtors are not at all given, we have to find out. Similarly, opening creditors. Opening creditors are 27,000. So creditors opening 27,000. By balance brought down, opening. To balance brought down, opening. Debtors will show debit balance, creditors will show credit balance. There is no opening bills receivable and bills payable. During the year, bills receivable received. But beginning of the year, there are no bills receivable, no bills payable. Now we'll take the transaction. First of all, credit sales. When we sell the goods on credit, the entry will be debtors account debtor to sales. Debtors account debtor to sales. So debtors account debit side to credit sales. How much? 2,10,500. Right. Similarly, credit purchases. When we purchase the goods from suppliers, creditors, entry will be purchases account debtor to creditors. Purchases account debtor to creditors. So creditors account credit side by purchases 1,90,000 here. This 1,90,000. Right? Now cash received. Come to the cash book. In the cash book debit side, received from sundry debtors 6,000. That means cash received from sundry debtors, not 6,000. It is amount received from debtors 1,72,000. 1,72,000 rupees cash received from debtors. Entry will be cash account debtor to debtors. So cash account already debited. Debtors account should be credited. So debtors account credit side by cash 1,72,000. Right? Similarly, cash paid to creditors. Cash paid to creditors. Creditors account debtor to cash. So creditors account should be debited to cash. 1,10,000. Right? Next, discount allowed to customers. When we allow the discount allowed account should be debited. Discount allowed account debtor to debtors. We are allowing the discount to debtors. So discount allowed account debtor to debtors. So debtors credit side by discount allowed. Debtors credit side by discount allowed 1250. Next comes discount allowed by creditors. It is discount received. We are receiving the discount. Who is allowing the discount? Creditors are allowing. So entry will be creditors account debtor to discount received. Creditors account debtor to discount received. So creditors account should be debited. So creditors account debit side to discount received. Or next, bills receivable received during the year. Bills receivable received during the year. The entry will be bills receivable account debtor to debtors. Bills receivable account should be debited. Debtors should be credited. The bills receivable account debit side to debtors 60,000 and debtors account credit side by bills receivable 60,000. Similarly, bills payable granted during the year. Bills payable granted during the year. Entry will be creditors account debtor to bills payable. Creditors account debtor to bills payable. So creditors account debit side to bills payable 50,000 and bills payable account credit side by creditors 50,000. 50,000. That's all. And apart from that, I forgot to take opening balance is also there for bills receivable and bills payable. I have not seen that one. In the opening balance sheet, bills receivable 10,000. Opening bills receivable 10,000. So debit side to balance brought down opening 10,000. Similarly, opening bills payable. Opening bills payable. The bills payable account credit side by balance brought down 1,500. Opening and closing we have taken. All the data which whatever is given in the problem I have taken. Now bills receivable. You can see bills receivable, cash received. Cash received from bills receivable we have not taken. Cash received on bills receivable. Cash book debit side. Cash book debit side you can see 35,000 to bills receivable. That means cash is received on account of bills receivable. Entry will be cash account debtor to bills receivable. Cash account is debited. Bills receivable should be credited by cash. The bills receivable credit side by cash. Similarly, cash paid on account of bills payable, that is given on the payment side. Payment side you can see by bills payable 45,000. That means cash paid for bills payable. So entry will be bills payable account debtor to cash. So cash account is credited. Now bills payable should be debited. Bills payable debit side to cash 45,000. That's all. That's all. So we have taken all the items, whatever is given. Now we find out the balancing figure. Now you can see debtors account. Debit side, both the values are ticked. Credit side, the three items are ticked. So debit side, take the total 2,50,500. 2,50,500 minus 1,72,000 minus 60,000 minus 1,250. The balance by balance carried down 17,250. This is the closing debtors. These are the closing debtors and this will go to the balance sheet. In the balance sheet debtors I am going to take 17,250. Similarly bills receivable. Bills receivable opening 10,000, 60,000 cash received. So total 70,000 minus 35,000. So closing bills receivable balancing figure is 35,000. This 35,000 we have to take it in the balance sheet closing. Similarly creditors. Creditors you can see debits credit side 27,000 plus 1,90,000. Total 2,17,000. From 2,17,000 deduct 1,10,000. Deduct 1,850, deduct 50,000. Balancing figure is 55,150. These are the closing creditors. This will go to balance sheet. This will go to balance sheet. Closing creditors. Bills payable. Bills payable you can see credit side 1,500 plus 50,000, 51,500. From 51,500 deduct 45,000. So closing bills payable are 6,500. 6,500. That's all. These four accounts we have completed. Now I am coming to the main solution, that is trading profit and loss account. Now see carefully. Trading profit and loss account for the year ended 31st December 2015. Opening stock. The last year's balance sheet, opening balance sheet is given in the problem. In the opening balance sheet, you can see opening balance sheet stock 45,000. Opening balance sheet stock 45,000. So here I have taken 45,000 opening stock. Purchases. We need total purchases. How much is the total purchases here? 2,15,000. 2,15,000 is the total purchases. So purchase 2,15,000. Sales. I need total sales. Total sales are 2,35,000. In this, both the sales are included, cash sale and credit sale. So 2,35,000 total sales. Closing stock. The closing stock is given in the last line. Stock on 31st December 2015, 90,000. So 90,000 closing stock. Now take the total credit side, 3,25,000. From 3,25,000, deduct 45,000, deduct 2,15,000. The balancing figure is 65,000 gross profit. We got the gross profit 65,000. Now carry it down. Here it is brought down 65,000. Now we'll start the profit and loss account. Now what are the incomes? Discount received. One income is discount received from the suppliers. So here discount allowed by creditors 1,850. Creditors are allowing us discount. So we are receiving the discount 1,850. Apart from that, commission receivable. Last item. Owing for commission earned by the firm 1,200. 1,200 rupees are due, receivable on account of commission. By commission receivable 1,200. So these are the incomes. Now expenses. Now see the cash book. In the cash book, payment to creditors we have already taken. Cash purchases we have taken here. Then bills payable paid we have taken there. Loans repaid. Last year loan, current year repaid. So it will not come in profit and loss account. Salaries 9,000. So I have taken salaries 9,000. Next rent 6,000. So rent 6,000. Then interest is 450. Interest 450. General charges 750. General charges I have taken 750. Then apart from that, discount allowed. Discount allowed to customers, debtors. How much of the discount allowed to debtors? Here it is given. Discount allowed to customers 1,250. So 1,250 discount allowed. Outstanding expenses. Some expenses are due but not paid. How much is the owing outstanding expenses? 1,500. 1,500. Over all expenses, losses we have taken. Now we have to take the depreciation. For depreciation, last line you can see. Depreciate building by 2.5%. Building depreciation 2.5. So 2.5% of what is the value of the building? Last year balance sheet you can see 55,000. 55,000 into 2.5%, you will get 1,375. Similarly, depreciation on plant 5%. On plant 5%. So what is the plant value? See the old balance sheet. Plant value is 30,000. 30,000 5%, 1,500. So 1,500 depreciation on plant. Now reserve for doubtful debts. It is given in the last line. Provide 5% reserve for doubtful debts. Reserve for doubtful debts will be created on the debtors, closing debtors. So here debtors are there. Debtors are there. How much is the closing debtors? 17,250 are the closing debtors. On this closing debtors, 5% is the reserve for doubtful debts. So 5% of 17,250. It comes to 863. This is the new reserve. This is the new reserve because end of the year we are calculating. But already old reserve is there. In the old balance sheet, beginning of the year balance sheet, provision for doubtful debts is 750. 750 existing. So new reserve is 863. The old reserve existing is 750. So deduct outer column 113. So 113 is the reserve for doubtful debts. New reserve minus old reserve. Existing reserve. Now reserve for discount on debtors. The last line it is given 2.5% discount on debtors. Debtors may claim some discount. So we are making a provision for discount on debtors. 2.5%. First of all, how much are the debtors? 17,250 are the debtors. From 17,250, deduct the reserve for doubtful debts. New reserve for doubtful debts are 863. New reserve. So deduct this new reserve 17,250 minus 863, 16,387. 16,387 are the good debts, recoverable debts. On this provision reserve for discount at 2.5%. So 2.5% of 16,387, 410 is the reserve for discount on debtors. That's all. Take the total on the credit side, 68,050. From 68,050, deduct all the debit items. The balancing figure you are going to get 45,702. The 45,702, this is the net profit. This is the net profit. So complete trading profit and loss account completed. Lastly, balance sheet. Now I am coming to the balance sheet. Liability side, creditors, bills payable. Creditors, already we have calculated the account. Creditors account, what is the closing balance? 55,150. So 55,150. Bills payable, you can see here. Bills payable, the closing bills payable are 6,500. We have prepared. It is not given in the problem. This closing creditors, closing bills payable, closing bills receivable, closing debtors not given. We have prepared the account to calculate that. The bills payable 6,500. I have taken 6,500. Now current year there is some outstanding expenses. Expenses outstanding due. How much? 1,500. 1,500 outstanding expense. Now we take the capital. X. Capital of X. Two partners are there, X and Y. X capital is 80,000, that is given in the opening balance sheet. In the opening balance sheet, X capital 80,000, Y capital 60,000. So X capital 80,000, to this we add net profit. The total net profit is 45,702. But two partners are there. The profit sharing ratio is not given. So we have to assume sharing equally. According to Indian Partnership Act, if the profit sharing ratio is not specified, make the assumption that equal partners. Both are equal, 50-50. So here 45,702 into 1 by 2 is 22,851. Half of the profit will be given to X and remaining half will be given to Y. So half of 45,702, 22,851 add up 1,02,851 minus drawings. Now see the cash book. In the problem, cash book is given last line drawing. Drawing of X is 8,000, Y is 7,500. So 8,000 drawings, deduct 94,851 is the capital of X after adjustments. Now Y. Y's capital beginning of the year is 60,000 given in the balance sheet. To this you add net profit half. 45,702 half, 22,851. Add up 82,851. Minus drawings, 7,500 are the drawings given in the problem. 7,500 deduct, 75,351 is the capital of Y. That's all. Take the total of the liability side, 2,33,352. Now come to asset side. Cash. The closing cash according to cash book. In the cash book, the closing cash is 9,050 given in the problem. So 9,050 cash. Now debtors. Closing debtors already we have calculated here 17,250 is the closing debtors. From this we have to deduct the new reserve and also reserve for discount. New reserve. How much is the new reserve? 863. 863. And how much is the reserve for discount? 410. So 863 and 410 both should be deducted. So 17,250 minus new reserve for doubtful debts 863 deduct. Then reserve for discount 410 deduct 15,977 is the debtors after deducting new reserve and reserve for discount. Next comes bills receivable. Already we have calculated the closing bills receivable here 35,000. 35,000 is the closing bills receivable. Then closing stock is given in the problem last line 90,000. 90,000 closing stock. Commission receivable given here owing for commission earned 1,200. 1,200 commission receivable. Next plant. Beginning of the year plant value was 30,000. Depreciation provided on plant 1,500 here. 1,500 is the depreciation on plant. Deduct 1,500, 28,500. Building. The beginning value of building 55,000. Depreciation provided on building 1,375. Deduct 1,375, 53,625. That is the value of the building. Over. Now take the total on the asset side, 233,352. Liability side, 233,352. Asset side, 233,352. Balance sheet tally it. If you commit any mistake anywhere, then your balance sheet total will not be same. Assets and liability, the total will not be same if you commit the mistake. Here both the sides are equal. That means we have done correctly. So this is the end of problem number 20. That is the last and final problem. So I have completed the chapter accounts from incomplete records or single entry system. Two names are there for this chapter. So in this single entry system, actually it is not a system at all. It's an incomplete method of maintaining the accounts. Normally this method will be adopted by sole trading concern or small business, very small business. They will not maintain systematic accounting. They will maintain this single entry system. It's a defective method because we cannot be able to prepare the trial balance. We cannot be able to prepare the trading profit and loss account balance sheet. So we don't have the complete information. But if a business follows single entry, then how to find out the profit? We have done the problems. Two methods are there: statement of affairs method and conversion method. The last 5 problems I have done on conversion method. Remaining problems, starting problems, are statement of affairs method. So in this way, all the problems. So if you want the complete knowledge, watch all the videos from beginning till end. Then only you can be able to get the complete power knowledge. Otherwise, simply if you want to pass the examination, there is no need to watch all the videos. Simply watch some parts of the video, you can be able to pass, but you don't have the power. You don't get the knowledge. So that's why I'm suggesting you to watch the video, all the video till the end. So already I have completed the next chapter, consignment. I'm going to start in the next video. So viewers, if you are satisfied with my lecture, give a like to the video. Subscribe my channel. It's very pity that almost more than 50% of my viewers have not yet subscribed. They are simply watching the video, enjoying, getting the knowledge, but not subscribing. It will give me encouragement if you subscribe. So please do subscribe. Give your comments on these videos. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Apart from this, I have uploaded so many other subjects videos like financial accounting, cost accounting, managerial accounting, corporate accounting, advanced corporate accounting, financial management, investment management, business statistics, income tax. So many subjects videos I have uploaded in the playlist. So watch frequently the playlist of my channel. You can be able to know. Select your subject, watch the video till the end. Definitely you will gain a lot from these videos. Okay, see you in the next video on the next topic, consignment.